Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you 5 major stories from the world of business. It's Wednesday, March 19th, 2025. This is Nelson John. Let's get started. 10 Club, once a rising star in India's e-commerce space, is on the verge of shutting down. Despite securing a record-breaking $40 million seed round in 2021 and an additional $30 million a year later, the company failed to find a sustainable business model. 10 Club followed the Thrasio model, acquiring and scaling small e-commerce brands, reported Shobik Das and Sneha Shah. However, its bet on home accessories and furnishings proved costly, as it struggled against established players like IKEA. Losses soared to 116.3 crore rupees in FY23, and with no cash left, vendor payments have stalled and employees' salaries are delayed. The brands they acquired didn't work out, and this model demands continuous capital for acquisitions and marketing, said a source. Investors have lost confidence and legal proceedings for insolvency may be imminent. The broader e-commerce aggregation industry is struggling globally. Thrasio itself shut down last year. For 10 Club, the dream of building a roll-up commerce empire in India may be coming to an end. India's market regulator, SEBI, is considering revising its contentious proposal to impose a gross limit on index options trading, following strong opposition from brokers, proprietary traders, and institutional investors. The proposal, aimed at curbing manipulation and reflecting risk more accurately, sparked concerns over reduced liquidity and higher trading costs. Market participants argue that the gross limit will widen bid-ask spreads, making trades more expensive and limiting the ability to hedge effectively. SEBI received nearly 1,000 responses, with most opposing the gross limit but supporting a shift to calculating open interest (OI) using delta, a metric measuring price sensitivity to underlying index changes. The proposal hampers large funds from hedging effectively, impacting liquidity, said an official from a brokerage firm. Some fear it could restrict high-frequency traders and foreign investors, potentially denting market volume. The move follows SEBI's October crackdown on retail derivatives trading after losses of 1.8 trillion rupees between FY22-24. While regulators want to curb speculation, the industry warns of unintended consequences on overall market efficiency. With mounting pressure, will SEBI ease the restrictions or will traders have to adapt? For years, Trent Limited rode a retail boom, with its stocks soaring 935% since the pandemic, fueled by aggressive expansion of Zudio, its budget fashion brand. But 2025 has been a different story. Trent is now the worst performing Nifty 50 stock, down 26% this year. What has changed? Analysts say Zudio's breakneck growth is slowing, with store additions falling short of expectations. Any meaningful correction from here on has to be Zudio-led, says HDFC Securities' Jay Gandhi. Meanwhile, competition is heating up as rivals launch similar budget-friendly stores. Trent's other brand, Westside, is also struggling with expansion. The company has been replacing smaller stores with larger outlets, which take longer to mature and initially generate lower sales per square foot. Despite these challenges, analysts remain bullish on Trent's long-term strategy. There's nothing majorly wrong, says Centrum Broking's Soham Samanta, adding that Trent remains a 40% CAGR story. The company is focusing on organic growth, expanding into beauty and lab-grown diamonds while strengthening its private labels. But for now, all eyes are on Zudio. If its growth continues to slow, Trent's stock would face further pressure. After more than 20 years, Bajaj Group and Allianz SE are going their separate ways. Bajaj will acquire Allianz's 26% stake in Bajaj-Allianz General and Bajaj-Allianz Life Insurance for 24,180 crore rupees, valuing the two businesses at 93,000 crore rupees. The deal structure involves Bajaj Finserv and Bajaj Holdings picking up small portions, while the bulk will be acquired by Jamnalal Sons. Yet, the stock market reaction has been muted. You ask why? While Bajaj gains full ownership, analysts believe this may not last long, as future listings of both insurance arms is on the cards. Does Bajaj need fresh capital? No, not really. Both insurance firms boast solvency ratio well above regulatory norms. Bajaj-Allianz General Insurance at 300% and Bajaj-Allianz Life at 369%. But valuation is key. Bajaj got its general insurance stake at a 16% discount compared to ICICI Lombard. A smart deal. However, the life insurance buyout seems costly, as its valuation is 40% lower than ICICI Prudential, reflecting weaker profitability. For now, investors remain cautious. Bajaj Finserv's exposure to lending via Bajaj Finance and Bajaj Housing Finance could still weigh on sentiment. The final test? Future earnings growth. IndusInd Bank's accounting discrepancies amounting to 1,530 crore rupees have sparked scrutiny, but its promoters are urging calm. Ashok Hinduja, chairman of IndusInd International Holdings Limited, insists that the bank does not need fresh capital and that corrective actions will follow an external audit by PwC. Once the report comes, the board will decide who is responsible, whether it was an error or misconduct. Hinduja stated at a recent event. The irregularities linked to currency derivatives have been ongoing for 5 to 7 years. The revelations coincided with CFO Gobind Jain's sudden exit and the RBI limiting CEO Sumant Katpalia's tenure to just 1 year. Despite regulatory concerns, Hinduja is optimistic. The promoters are awaiting RBI's approval to raise their stake from 15% to 26%, calling the current valuation an opportune time to invest. Meanwhile, IIHL's acquisition of Reliance Capital will fuel its expansion into insurance. Hinduja sees potential in Reliance General and Reliance Nippon Life, aiming to grow and list them in 2 years to repay debts. For now, Hinduja's message is clear: wait and watch. But for investors, the question is, will patience pay off? That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a wonderful Wednesday.